Well, consider this, right? We've been talking about the importance of global dollar liquidity for 9 months now. It's very important. And I hope these all-time highs, I hope if you weren't thinking about it and you were thinking about narrative, that these all-time highs has really like stuck in your head of, hey, wait a minute, how can we be at all-time highs? The Fed hasn't cut rates yet. Bad news happening. Immigration crisis, war crisis. Why is it all-time highs? Remember COVID. Remember the global financial crisis. The bad news is met by liquidity. And if global liquidity goes up, assets that are highly correlated with global liquidity, namely equities, especially tech and Bitcoin, go up as well.
But
Peter, I want people to know this.
Yeah, but Jerry didn't cut rates. I call him Jerry.
It's so funny. It's so funny. Peter, if I were to ask you, so you know what the mandate is? I'm going to test you. Guys, if you're in chat, you know this, just let me know. What are the two things the Fed is supposed to do?
Low unemployment.
Correct.
And I forget the second one. Which one? What is it?
Stable prices.
Stable prices. I was just about to say stable prices.
Stable prices. Exactly. Yeah. Low unemployment and stable prices. In their mandate, does it say, but if this person is elected or this party is elected, then you gotta have to pause on those two mandates. Like you don't want to seem like too political. Is that what it says?
No, doesn't. I don't think so.
Exactly. They have to do whatever they need to do in order to supply liquidity to the markets, because that's how you make stable prices. Unemployment, it's neither here nor there. I don't know that they care about unemployment so much as stable prices, especially in the bond market. That's important. Why? Because the Fed is in the job of selling bonds. United States is a bond sale. The thing that America exports is dollars and consequently bonds. Why? Because a dollar is just a bond of infinite maturity with zero interest rates. Hope I didn't blow your brain there, Peter, with that for a second. Stop my line.
I've heard you.
Yeah, learned this from Stephen Van Meter. Very good explanation for it. Dollars and bonds are basically the same thing. Except bonds are far more liquid, ironically. So the Fed has to sell bonds. Why? Because they have to finance the debt from the government. So they have to keep it going. So if liquidity isn't engineered, if they can't create that liquidity, if the liquidity is lacking, what happens to the government? They can't spend, they have to shrink. That's not going to happen.
But Doge, Tom. Doge was supposed to cut.
Yeah, well, how's Elon and Donald Trump? How's their bromance going? Not so well, right? Elon wants to start the American Party. All right? That just tells you where things are going. Moving away from fiscal prudence, which is generally why the Republicans are put into office, in order to rein back spending, bring back conservatism, bring back saneness.
Not for the past 10 years.
In spending. Yeah, exactly. I mean, that's why they're voted in, not what they do. Not what
I don't
they do
think
at
they
all.
talk about that anymore. They rarely talk about spending anymore.
No, Donald Trump and the acolytes, the MAGA movement was all about ending the wars, the deporting immigrants, make America great again, focus on production locally, grow GDP to combat the debt. Whole thing. It was all about this sort of like conservatism.
Yeah, but they weren't talking about smaller government like they used to. They used to talk about smaller government. Bush.
No, Peter. Vivek Ramaswamy was talking about cutting whole departments, or cutting staff.
Who?
If you have an odd number on your social insurance number, you're fired even when you're still there.
It wasn't like a main focus like it used to be. It really wasn't.
No, I understand. It's not like back in the Ron Paul days, but the idea was that there's supposed to be a focus on productivity within the United States. Make America great again, America first, whatever you want to call it, right? There was supposed to be some semblance of where they become spending. I mean, Doge, the whole thing with Doge, the government efficiency. We're going to cut $2 trillion from the deficit. The whole thing, it was all about smaller, limited government, all the things. You know the words. was all about that, right? So there was that sort of idea. That, in case you're not aware and you thought it was still going to be the case, is not happening. Big, beautiful bill. Let's talk about it. Because we're talking about how the Fed's not cutting rates. So why is the market acting as if it is? Big, beautiful bill. Spending galore. Hundreds of billions of dollars spent in all kinds of different ways. And that money needs to come from somewhere. Where does it come from?
Inflation.
No, bonds. Well, inflation. I mean, not technically inflation. It's more debasement of currency, but bonds. Right? They got to sell bonds. That means we got to get the interest rate down. We got to get that interest rate down before those bonds need to be purchased. They don't want to buy bonds.
You're saying they will be cutting? What's the forecast? Like,
first of all,
I heard
guaranteed they're going to be cutting. There's no way they're not cutting rates. Okay, I mean, you can take that to the bank. Not financial advice, do your own research, but they're cutting rates.
Why is it then that there was all this talk about trying to get Jerome Powell to cut rates? He's too slow, when all they had to do was jack up the spending and force him to cut rates?
Well, because if they cut rates, then the signal is sent sooner. So what, I don't know, I assume Scott Bessent knows this, Treasury Secretary. I don't know about Ludnick. I don't know about Trump. I don't know, the people making decisions. But the Fed, their main power isn't in cutting interest rates. It's in forward guidance. Have you heard this term?
Yes.
What they want to do is what's called jawbone the markets into front-running their decisions. Because they want the markets to act as if liquidity is increasing so that the market participants participate and thus add liquidity. So they do things to signal to the market, one, that they're going to reduce the downside, and two, especially for bigger players, that they'll be able to refinance at lower interest rates. So borrow now, because when you refinance, you'll be able to get a lower interest rate. That's the whole part of the whole game here, right? That's the lowering of the volatility. Because if people are worried that they don't know what interest rates will be in the future or what they'll have to pay and whether the markets will be supported, well, then they don't participate as much. They pull back their capital, and then you have volatility, you have lower liquidity, and this thing feeds on itself until you get a deflationary spiral. But the Fed couldn't say that they're going to cut interest rates. But their dot plot, if I'm not mistaken, their dot plot from the FOMC statement, was it last month, was saying, June 17th, June 18th, the FOMC announced that the federal funds rate would remain at 4.25%.
Do I share your screen? Sorry.
No, to 4.5%. But the dot plot, a chart reflecting individual FOMC members' rate expectations, indicated a median projection of 2 25 basis point cuts in 2025, likely starting in September and possibly followed by another in December, lowering the rate to 3.75 to 4%. This was detailed in the SEP release alongside the June meeting minutes on July 10th, 2025. That means Jerome Powell says we're pausing, but the dot plot, the expectations are saying, hey, but we're probably going to cut twice this year. So forward guidance, which means you can act now as if they cut those two interest rate cuts.
What would be the difference if they just cut it? When people just then immediately start acting with more confidence?
Well, the idea is that they would be like, okay, well, the Fed is being partisan, political partisanship, and that would cause problems. And then also if they cut without any crisis or anything like that, it makes people blame the Fed if there's any problems down the line. They go, you're cutting to make the stock market go up higher, and you're exacerbating problems, and you're increasing the difference between the rich and the poor, this whole thing. So they want to avoid all that.
But
so what they do is they say, we're pausing,
right,
and they go, but we're probably going to be cutting later this year.
Yeah, but once they cut later this year, then they'll fall into that trap.
But they'll cut first, if the effect of them going to cut happens now, as if they did cut, then it doesn't matter if they don't cut later on. Did I tell you stock market's at all-time high?
They might not cut, is what you're saying?
It doesn't matter. if the people are behaving in that way, what does it matter if they cut?
Well, I'm addressing the fact that they would be blaming the Fed. So how does the Fed avoid blame? Even the forward guidance is associated with the Fed.
No, that's the brilliance of the forward guidance.
Oh,
The forward guidance is, well, we didn't say that. You just thought that. So
yeah, okay, but that's like, why are you hitting yourself? And you're like, I'm not hitting myself.
No, Peter. The regular population, the regular folks, the congressmen who don't know a Krugerrand from a dollar bill, they're not listening to forward guidance.
Uh-huh.
They're not listening to forward guidance.
Okay.
They're not considering that. I wonder what it means, what the dot plot means, and how that historically matches with the interest rate. They're not thinking that. You think they have a Bloomberg machines? They don't even know Bloomberg has two O's in the word. They have no idea. Have you heard these hearings when they talk to the Fed and pull
somebody there must know. The committees.
Yes, but they're a minority. The Ron Pauls of the people of the world know, but so what? Ron Paul wanted to audit the Fed for 20 years, and that never happened. What difference does that make?
I get it. So they're not going to blame the Fed. So the Fed does a sneaky, and makes people think, oh, we might, and then they get the benefit without actually having to pull the trigger. Or if they do pull the trigger, at least they won't get the blame.
The greatest trick the devil ever played is making you think that they're going to cut interest rates when they haven't.
I don't think that's how that quote goes.
Pretty sure I'm paraphrasing it. It's the spirit of the thing.